Well, hello, everyone. Welcome to the Royalties and FinTech panel, where we will be discussing a obviously vital topic, the future of payments in the digital age. Because as royalties become increasingly complex, artists and songwriters are demanding more transparency and faster payments. So during this panel, we will be looking at the evolution of royalty statements, the future of payments, the increasing need for sophisticated financial technology and other topics. There will be time for a Q&A at the end. So if you have questions or topics that you want us to cover, fire away in the Q&A chat and we will get to as many of those as possible. I'll be moderating today's discussion. I'm Will Griggs, Chief Experience Officer at HIFI. At HIFI, we're building the financial rights organization for the music industry, and our members get access to a community of industry peers, as well as technologies and financial services that we've built specifically to meet the most pressing financial needs in the music industry today, including our royalties dashboard that allows our members to see a holistic viewpoint of the royalty earnings across their career in one place, and our cash flow service as well. It's my pleasure to introduce our panelists. I'll start with Jim Warner. Jim is the Chief Operating Officer at multi-award-winning treasury and payment fintech Centtrip. He was a founding member of the business in 2013 and oversees the overall business operations and procedures. Jim is a foreign exchange and international payment specialist who has held several senior executive roles in operations and compliance. Thanks for joining us today, Jim.
Hi, guys.
Next, Rory Bernard, CEO of Synchtank, where he is deeply involved in the strategic development of the company and spends a lot of his time hands-on with a wide range of music and media clients, helping to develop their technology strategy. Cheers for joining Rory, and to Emma and your whole team for hosting this great event.
No, it's great. Thank you for everyone being here.
Next, Milana Rabkin-Lewis. She is the CEO and co-founder of STEM, which is the leading distribution, payment, and financing solution built to simplify the process of releasing music in today's industry and designed to empower artists and their teams to run their business truly independently. Thanks for being here, Milana.
Thanks for having me, Will.
And last but not least, Marcus Cobb, who is CEO and co-founder of payments company Jammber. Jammber helps creatives get paid faster for music and other content they create online. And previously, he was a technology leader for Fortune 50 companies, including Microsoft, Dell, and Citigroup. Thank you for joining us, Marcus.
Thank you so much.
It's a great panel and people who really are coming from different angles, but really approaching the payments and making sure that the innovation around payments and making things more artist-centric is really the focus. So really happy to be here with you today. And in terms of the format, I'll be asking some questions. Initially, I'll direct them to a specific panelist, but then please, let's open it up to a conversation. I'd love to hear everyone's thoughts across the board as much as possible. But this first point is for Marcus. There is an increased pressure for labels and publishers and other services to get payments to artists and writers and other rights holders faster. In terms of speeding up payments, what are the challenges here, and what are the barriers to getting to real-time payments?
Well, I think that just historically the industry at large has been pretty fragmented. Partly as a matter of function. Publishers were here and they had a specialty around with songwriters, and labels were here and they had a specialty with artists, and in a corporate environment, those pieces fit together, relatively well. And you would offset timing with things like advances. In the streaming era, it's just changed so rapidly, and it's very difficult for those silos that are communicating still by and large with paper across, territory lines to move that bureaucracy as quickly as the money would like to move. And we often hear the blockchain's the answer. Maybe in the future it might be, but a large part of it is just increasing communication, raising up the technical, standards that we're working on, things like DDEX, et cetera, so that we can automate the bureaucracy with the money. And I think we're moving towards that as a whole.
And what specifically is Jammber doing to address, the need for faster payments, for payments to be lined up with the reality of our industry, which is that artists and their teams are promoting the recordings in real time through social media, through content creation. They're putting up more music than ever. How are you guys approaching, those challenges and opportunities in terms of matching up the payment flow with the sort of natural evolution of a career in music today?
Yeah, well, frankly, I think Jammber got very lucky. I mean, we're in some ways standing on the shoulders of STEM. We'll hear from Milana and also DistroKid, et cetera, because the emerging independent artist splits is so important to how they work together. They're not, sometimes they're paying money up front, but a lot of times they're saying, hey, I'll give you 10% of this song that I'm working on in exchange for some production work or my cover art, whatever it might be. And so while companies like STEM and DistroKid and even Symphonic are doing that really, really well for their artists, at Jammber, we decided to take more of a neutral position. Like, let's be the PayPal of splits for anybody. And thanks to the market pressure, frankly, that they put on, that became a pretty popular option early on. And to tie it off, when COVID hit, we were like everyone else scrambling to find our place in the universe. And this beautiful creator economy just started coming up around, and splits became ubiquitous in a way. And we're seeing splits across music, of course, but also private chef use cases and really interesting artistic YouTube use cases. And now we're like, wow, this might be the future. Now, funny enough, Milana, I saw your pitch deck for years ago, and you were already kind of predicting this is where it's going to go. But I think what's happening is that what we're doing now, where it's easier, is with distributors, right? Publishing still has a long way to go before it can be fully automated, but with distribution, we're getting really, really close. Distributors are getting paid 30, 60 days, they're paying out within a week. And so when they pay Jammber through our splits platform, we pay out the collaborators automatically. And that can save weeks or months for those collaborators and increase the momentum. And we're finding that to be a really, really powerful use case. And we have a long way to go, but it's exciting.
And that's a beautiful lead into the next topic, which is interwoven into Marcus, what you were just talking about, which is that music rights have become increasingly fragmented. There are so many stakeholders, the splits, the co-ownership, the increase of collaboration across artist careers, and the deals and payments are therefore becoming more complex as well. This one, I'll start with Milana. How can technology assist with that?
I think there's a couple of things, right? I think that the first thing you need to do is change behavior. And the behavior that needs to change is people need to actually understand what their participation is on any project. And so how do you make it super simple for people to memorialize that as early on in the creation as possible? I think, when we came to market, we initially thought that we could hold up releases until people agreed on splits. And we learned that that was too big of a leap to make. And so how do you encourage behavior to change? And I think that making it super simple to memorialize even before legal contracts are written, because that takes a long time. So how do you eliminate the friction and people coming to an agreement on who gets what and who was in the room? I can't tell you how many people can't even remember what that piece of it is. And I think that's where Marcus and I really align in our missions, is that it takes a lot of people to change behavior. And I love what Jammber's done in terms of being able to record all the different people involved in the production process, from session musicians to the artists and the people who get a piece of the publishing or the master. I think the other thing is, the thing that I find so funny is when distributors or labels claim that they don't get paid for 30 or 90 days. And, I'd love to call bullshit on that more often, because in most cases, they're getting massive advances of the revenue upfront from the Spotifys and other platforms of the world who offer that as a licensing fee upfront. And so that's just not true. So I think a big piece of it also is demystifying the realities of the current music business and not confusing people with what happened in the past, because it is kind of silly. And then the third piece is, forcing better practices around data cleanup. Despite the amount of investment that the DSPs have put into the front end, their back end is still pretty messy, right? Like, anyone who touches the reporting from them knows how much cleanup work is still involved in even like matching the data to the right assets and making sure that things are consistent. And quite frankly, the amount of activity that's happening with the trading volume of rights, it's making it even messier, because the rights are trading hands and shares are being sold to other people. So just facilitating more streamlined way of updating that information across multiple systems, I think plays a big part in that as well.
Absolutely. And, I'm curious if you've seen, you're talking about changing behavior. Obviously, over the past year and a half, we've all had to adapt and change our behavior in so many ways. And I know that, artists, songwriters, creatives of all stripes have had to adapt and change. Milana, have you seen, in terms of those behaviors changing, in terms of the way that people are thinking about, whether it's data cleanup, whether it is talking about splits and collaborations earlier on in that process so that things don't get fraught later down the road? Have you seen those sorts of behaviors changing in any specific ways that you think might play into the sort of the innovation that we're talking about within payments?
Yeah, I mean, this is something that came up in a panel I was on last week around, which was focused with a lot of different business managers. And this is something that we witnessed as well. But, during the time of COVID, artists were able to slow things down and really evaluate where the revenue was coming from and started to analyze where there were missing gaps or where things weren't clean. And I think that, it used to be that recorded music was the predominant revenue stream in the physical world. And then touring overtook that post Napster. And so people initially, let's not forget, would tour an album to promote the album, to sell more records. Today, people release music to sell more tickets touring. And I think COVID reset that because touring became less of a dependable revenue stream. And so most artists started looking into where was their revenue coming from? And on the music side, where weren't they seeing the revenue they had expected, and why was that? And I started asking questions and, quite frankly, putting a lot of pressure on the business managers. And I think for some artists, having a business manager was a crutch because they would just continue to do the things they were doing and assume that the business manager would clean it up eventually, and that it wasn't their job to make sure that things were registered correctly, and it wasn't the manager's job either. And so I think now we just had a lot more clients being thoughtful about, well, where is my money coming from? Where is it not coming from that it should be, and analyzing it. So I think the only way that the platforms, including ourselves, including the DSPs, including the rights organizations, to me, everything that's a platform is what generates revenue or collects revenue for you. We can only innovate and build as much to serve the clients as they want to actually use, right? Like, we can out innovate and build solutions for problems that, if the client doesn't believe they have, are never going to solve themselves.
Absolutely. And, that transparency, that ability to see, the reality of the situation financially is really becoming the currency of today. And this one, I'll start with Rory, but, artists and writers are now expecting access to data, analytics, real-time reporting. How does Synchtank facilitate this? And how does Synchtank help make this data actionable for your clients?
The main thing is our end clients, which are clients of our clients, it's all about providing the tools to our clients to make them stickier to their clients. And we're sort of a B2B2C, if you like, that in the way that we deal with all of that. So we're constantly having to look at the market, see what's engaging with writers and artists where we deal with them on royalty systems, and working out ways to link that into the data that we're working. And that may not just be data, it may be services as well. Things like Jammber and various other payout systems, where they work well and where they work slickly. That adds real credibility to our publishing clients. And just going back to the original point that Marcus made is, these are also very dependent on geographic areas. Banking in the US is very, very different to banking in Europe, and it's being aware of these different areas and the challenges or opportunities that each one of them brings, and how you make that available to the client base and through to the writers and stuff, with minimum effort from the publishers having to do the work.
Anyone else seeing actionable use of data in terms of seeing trends, seeing specific pain points, or seeing specific opportunities through the lens of data in your worlds?
I just thought that when we got the email from Emma and it talked about the currency transparency, I just thought that was a really eloquent talking point, because that has been the biggest subtle shift I've seen in music creativity. It used to be, frankly, more trendy to be shady, right? You would show people just their part of the deal and just their part of the data. And that was by and large how the music industry operated for a long time. Matter of fact, when we first did our Splits app, we kind of let people create silos around their conversations for that reason. And we found out that's not what they wanted. They wanted to create this whole era of just transparency. I want to know what's going on with my song. I want to know who we're collaborating with. I want to know what the splits are, and let's go on to the next thing. And we're finding that the artists who are, and the labels for that matter, who are the most transparent about deal structures are just getting a lot of street cred across the board.
I think the thing for me, and going on touching on a couple of those points there about the cross-border transactions is where there's always been somewhere to hide some revenue for someone. So, you know, I'm collecting funds from the US, I'm in the UK, I want sterling. It gives someone an opportunity to take another slice of the pie. And I think that's a real challenge of blockchain, and crypto is probably going to be touted as the solution to this. But ultimately, if you're transparent, then problem solved. And I think the challenge, as I think has already been said before, is you put garbage in, you get garbage out in terms of the data. You know, if we talk about blockchain and the metadata of potentially attaching bank details to the copyright data, well, the challenge there is the bank details you provide will be different whether the money's coming from my local banking system or from internationally. So it's a huge challenge. And I think there's definitely steps people are taking to fix it for new works that are coming out. It keeps coming up. You've got to fix the old legacy stuff, and that's the real hard part.
Yeah, I mean, in terms of the international challenges, you know, as the sort of music financial system becomes more and more global and more connected, how does Centtrip navigate the regulatory landscape across territories, and how do you guys maintain parity for your clients across those territories as well?
With a great deal of difficulty, actually. So the regulatory landscape means that currently, you know, you have to be regulated everywhere you want customers. So at the moment, we're regulated out of the EU and now the UK as well. You know, we've left, so we need to be regulated in both places. But you know, and obviously to serve customers internationally, in terms of having our own clients, we need to go and be regulated in those places. So, you know, I can't have a client in the USA right now. We will at some point very soon, I'm sure, but right now we can't, because we cannot legally serve those customers. So of course you can solve those problems, but it takes a behemoth, you know, in fintech to be able to do that. And you know, there's a lot of people coming at it from different angles, from different countries, with same ideas, similar ideas. I think you'll see a lot of consolidation of those businesses over the next few years, which will help solve that problem for the likes of you guys who are collecting those monies and receiving those monies.
Absolutely. And, you know, in the market, we've seen there's been an increase in services that are offering access to pipeline earnings, different approaches to loans and advances for artists and different folks in the creator economy. This is just broadly for the panel. Do we think that these solutions are popular? Are they increasing in popularity? And also, what are the risks and trade-offs? That's something that came up actually in the Discord, which I encourage everyone to check out and connect and meet each other on there. But the fact that often these more innovative, financial services for artists are presented without really thinking about the risks and the trade-offs. But A, do we think that that these services, these new approaches are gaining popularity, gaining steam, and what are some of the trade-offs that artists and their team should be looking out for?
I'm biting my tongue because I love these topics. So I'm waiting for someone else to
Marcus,
chime in.
please jump in.
I love these topics. Jim hit it on the head. So for example, you know, Jammber, What we're doing now would have been impossible 5 years ago because we're using Stripe for a large volume of our payments, and they have a cross-border feature which allows us to send money across borders from U.S. banks to separate accounts with, having currency conversion compliance laws built in. But we still have to do things like royalty treaties and withholdings and WABENs and all the things you don't even know about until you break the rules or you have to hire someone that knows that stuff. So when you have that type of thing, and that's the payment infrastructure, how do you build these balance sheet products like advances on top of that? Well, the biggest challenge with it is that you don't have visibility. We're using machine learning. A lot of companies are using machine learning or historical earnings to say, okay, look, you've made $5,000 or $100,000 consistently for the past 2 or 3 years. Based on that, I can give you an advance, but you're going to pay 30% on that APR in the United States, and there's still a risk of attrition. So it's really hard to build balance sheet products until we can start really predicting income. And we're not there yet. And I'll just end with saying, I've seen a lot of artists turn down advances. They'd rather build what they're considering passive income over time, so they can depend on those royalties for a longer period of time and build a foundation on that.
I think the other thing there, Mark, as you touched on, using the likes of Stripe, you're probably going to be getting hit with 1 up to 2-3% even on your foreign exchange. That's if the company is using the live exchange rate, right? So you again, it's another link in that long chain of someone taking another 1% or 2%. So it's, the artist at the end, or the copyright owner at the end, you're eroding what's going into their back pocket. And I suppose that's the problem we're all trying to solve, right?
Well, you're right on. Like for Stripe, we have to open up a platform account in each territory, or we're paying that fee between that range you mentioned. And so otherwise we have to set up a bank and an entity in that territory, in the UK, and across in Japan, in Brazil, where we're seeing traction there as well. So as you mentioned, it's with great difficulty, Jim, to build out these infrastructures, but at least it's possible now, because the artists, they're just creating all over the world. They're just creating. They're not thinking about bureaucracy as they shouldn't. They're just making music.
And how do you guys see more traditional, I'm using that sort of a broad term, but more traditional companies, the labels, the publishers, in terms of offering advances, offering that more traditional access to working capital, and some of the solutions that are coming out of the tech world, the fintech world, more innovative companies taking different approaches? Are we going to see an increase in loyalty? Are people just going to be sort of window shopping and looking for the best deals?
Oh, I have such an opinion on this. I think it depends on what kind of an artist you are, right? And it's the same thing as what kind of an entrepreneur are you? I think there's some people who want to bootstrap and raise only what they need and be in control. And there's other people that want to de-risk early on. I think that record labels are great places to go if you want to de-risk early on. And, I think the structure, the incentive structure, the relationship says it all. When you take a major label advance and you're selling them your music, you're selling them your rights. And for some artists who've sweated it out, bootstrapping it for years, right? Like, let's not forget, artists aren't born overnight. Her, by the time she became a commercial name, had been working behind the scenes for 8 years. Imagine being an entrepreneur for 8 years running your business, which is something I think all of us can relate to. At a certain point, you want to take a little bit off the top, de-risk, and then get a bunch more resources, but you're conscious that now you're an employee of your own work. You're not the owner. And I think one of the fundamental problems with the record label model is that they do underwrite unfairly, meaning that they bucket risk pretty broadly. So an emerging artist is being underwritten the same way as an established artist with a lot more history. And of course, the more established artist has more leverage over time, but the type of underwriting criteria is fairly similar. And I think that that's the problem, is that you have people with a lot more dependable revenue with a lot less risk that are getting the bad end of the stick and are having to pay a lot more money for the money that they're getting, and not even guaranteeing the resources. And if anything, they lose control over what they're getting in. And so, I do admire, and obviously if you look at our scaled product, it's very much inspired by what Square Capital has done, and Shopify Capital and Stripe Capital and all these other online SMB business lending platforms, or advanced platforms, I should say. And we just think that there's a whole subsector of people who are underserved when it comes to access to capital. And for us, it's not just the artist, because we do facilitate payouts to a lot of different types of roles, whether you're songwriters or producers, or you're the sound engineer, or you're the manager or the label, or the friend who's doing creative direction on the music video, right? Like the artist can choose who they share revenue with. Any of those people can access capital. And I think that's the most exciting thing, is that the artist may have a ton of different options, whether they're going to a major label, whether they're going to a distributor, whether they're looking for solutions from platforms like HIFI or STEM to smooth out their revenue and take a little bit of money. The people they work with have way less options. And so for us, it's exciting to be able to offer more fair terms with more precision around what is the use of proceeds, what is the growth trajectory for this role and for their revenue, and how do we underwrite it in a way that's really more fair, and more than anything, put the control in their hands to determine how much risk they want to take on themselves. Do they want to pay a higher fee and take out more money, or and pay it down slower? Or do they want to take out what they need right now, pay it down quicker, pay less? And I think there's different types of artists, and I think that they should be in the driver's seats of those decisions, not someone else.
We are beginning to find artists and writers are very much more aware of where their places in the market at the moment. There's many more tools to be able to see, am I on the up curve or down curve, how am I doing? And therefore, is this a good time to make a change or a different decision in the way that I'm financing myself? Because I can see, things are picking up at the moment. I should be able to cut a good deal, but give me another 6 months, maybe something's happened, or the availability of the stats and the clarity of them makes it much easier for them to make decisions. And a lot of the artists and writers are a lot more informed about how they make those decisions now. And the pressures on the labels to get more done for less money all the time, and you end up with a bait and switch, which screws the artists in the end, unless they're aware of what's happening in the market.
I'm going to jump to a question that came in through the Q&A chat. This is just about live streamings and platforms such as Twitch, Mixer, etc. Do we need a blanket license, and is that achievable with the rights landscape we face today? And I think we can open that up even beyond just Twitch and Mixer, but to a lot of these new channels that are becoming not just supplementary, but actually a primary source of revenue for certain artists. Do you guys?
I mean, it's hard to say a blanket license without okay, what are the terms of that blanket license, right? What's the usage of that blanket license? What's the clearing for that blanket license in general? But I think it's healthier for the industry overall if more music can be monetized on these platforms. I mean, we're having billions of streams before the policies are even written and the deals are even done. And to me, that's cost of opportunity for everyone involved. So if a blanket license might be a great place to start, but then what does that look like? Because the usage is very different between a 30-second clip here and your reels and a 2-hour video that I'm watching on YouTube while you're gaming. That's very different usage. But I would love to see these artists get compensated. We're working with some of the biggest songs on, I think 3 or 4 of the biggest songs on TikTok we're either administering for or helping collect royalties. And it's a pain in the ass, frankly. I mean, it's just the deal structures aren't there, and the conversations are challenging to start with and be had. So yeah, I'd love to see a framework in place.
Thank you, Marcus. Another question from the Q&A chat, this one from Jason Powers. Thanks for the question, Jason. Essentially, the question is and maybe I'll kick this to Jim, how do you deal with the banks on the respective sides of transactions internationally so that they keep their fees and exchange costs competitive?
Well, it's individual negotiation on both sides of the payment channel, right? So if as the sender of the payment, I'm going to get better fees if I'm doing large numbers of payments and high volumes of payments because my bank's going to make more money out of me. You have a way when you're sending a payment internationally of controlling what portion of the fees you take when you're initiating it, whether you're happy to absorb all the fees or whether you want to push the fees to the receiving end. And then on the receiving end, again, it's still individual negotiation with your banks. And unfortunately, this is that last leg of this whole chain of getting that dollar or the pound coin in the back pocket of the copyright owner, where you've got the big challenge. Because of course it's fine if I'm receiving a $50,000 payment and I get charged $5, no big deal. But if that payment is for $100, well, the $5 charge is going to kill me, right? So it is a big challenge. And I think you know, certainly, and more so on cross-border. I mean, locally, you know, you got a local ACH or a local faster payment in the UK, no problem at all. It's the international stuff where there's a big problem. And I think, you know, you can look at some of the fintech players out there who are solving that problem. You know, people like TransferWise. You know, you've got the more advanced fintechs in terms of having a bigger international presence. And I think the open banking and open API nature of the way financial services are going can only push those fees one way. So, you know, I don't think those fees are going to get worse. The problem will be the banks will be trying to find where they make their money somewhere else, right? So if they can't make their money on the payment fees, how do they thrive? You know, so do their foreign exchange fees go up and they hide those somewhere else? Do they start charging you a monthly fee to have the account? So again, it may well come back around to the whole crypto conversation, which is, you know, how can you use that to solve the problem? But ultimately, you know, everyone still wants that fiat currency in their back pocket.
I think you point out a really interesting thing is that, you know, the intersection of music and fintech, you're dealing with two incredibly archaic institutions on either end. Yeah. And I think this is what I personally find the most exciting about the industry and the ecosystem is the fact that both institutions outside of music are being challenged. And I think that if record labels are really honest with themselves on the role they play today, they are just big banks. And they have really outdated infrastructure. And the big banks themselves are dealing with very similar challenges in that they're not set up for a global economy and a world in which commerce can travel seamlessly across borders, because right now revenue and payments don't. And I think that that's the crux of what's holding back the industry on both sides and sort of the global economy. And if you think of creators and musicians as a sector of the working class, which I think that that's the part that we all believe is going to continue to grow and expand, both things need to change and align in order for any of us to be truly successful in realizing our full visions. That's not an easy feat and that's not an easy challenge, but I think that's why you're starting to see so many companies attempting to fight this fight, is because it takes so much effort and you have to attack it at every level from every angle in order to move the business forward.
Yep. And I think you're right. And I think the greed of the traditional finance sector in the banks, I don't know if we've got any banks here, but you know, unfortunately, the fintechs will predominantly still rely on that underlying banking infrastructure to move the money. So it might look on the face of it that, oh, there's this great trendy fintech company here that can now move my money around the world. Ultimately, that last end leg of that payment has got to leave the fintech at some point and get into your bank account. So and in order to do that, you need at least one bank, the bank who's receiving the money. So they're always going to be there somewhere.
Yeah, but I agree with you both. I mean, it's why I'm super optimistic. You know, this was a global pandemic that we all went through, and there are these amazing periods of creativity that come after pandemics historically, the Renaissance being one of them. And we're seeing it. I'm hearing some of the most beautiful singular music I've ever heard, some of the most daring music I've ever heard, because people are just creating. And so what's going to happen, and my hope is that this bureaucracy we're talking about, this kind of global financial chain, is just going to burst because people are going to find a way to trade. I just saw somebody say barter. They're going to find a way to collaborate together. They're going to find a way to work together. Because one of the problems is not just that we have this institutional banking system, but also the disparity in the value of that local currency. You know, charging $5 in the US is very different than charging $5 in Mexico if I'm collaborating with the producer there. And so what people are doing is they're exchanging value. And I know crypto is a huge part of the conversation, but crypto has its own challenges. It'll get there eventually, but you can just watch right now. Crypto itself becomes more expensive the more ubiquitous it becomes, right? And I know really smart people are working on those things, but human beings outside of technology are going to find ways to collaborate and barter. And what I am focused on is bringing down the barrier to reward. I think we're bringing down the barrier to entry. It's really easy to create together, but we're going to see velocity increase if we bring down that barrier to reward. It shouldn't take you a year and a half to get your first check on the publishing side. That's stupid. You should get it like any other paycheck, like we talked about. We opened it up, right? We have to bring down that barrier to reward so that people can see they can monetize their creativity as quickly as possible.
Another great question from the Q&A chat. This one's about income optimization. Income optimization is fast becoming a part of forensic accounting remits, Forex reviews, identifying strategic partners with the lowest admin rates, reviewing escalation rates and historic contracts. I think more broadly, the question is, how can we make sure that artists aren't leaving money on the table? How can we make sure that their business is tight, that they make sure that every link in the chain is secure? You know, whether it's those specifics that I just laid out, or just more broadly, what are the things that you guys are seeing in terms of income optimization and making sure that with all that complexity, with all the different partners in your career, with all of the territories that we're talking about and the regulatory issues, how do you make sure that you're as whole as possible?
I mean,
in
well,
the face of
that's
all that?
your opportunity with HIFI, right? Show all the places that they should be pulling in revenue from and where there's gaps, and then help them figure out where those gaps are and who they should be talking to. I think most people don't know what they don't know. I think the other piece of it is when it comes to the inner complexities of the agreements, like escalations are garbage. Like, we need to go away with that. I think just some of the deal structures that used to exist, I think it's going to be hard to surface to artists where they've done business the archaic way because they had little leverage. But I think at the beginning, it's just turn the lights on, show them what's coming in, what's not coming in, help them figure out how to get what's not there. And then I think from there, it's like, can you benchmark that data? Can you show them where maybe there is less optimization and where they can use more leverage? And I think this is where more community and information sharing is really powerful. I think when I look at the startup ecosystem, what I find incredibly helpful about it is how open and honest people are about their successes and failures. Like, if I have a question, I have a community of other artists of other entrepreneurs I could go to say, hey, I'm dealing with this one challenge in structuring my terms with my next round VC. Here's the kind of things they want to put in the term sheet, and they're not clean, and I want to figure out how I, what I do about it. In the entertainment industry, people aren't open. And so how can you evolve if there isn't as much open source information or power knowledge so that people can have that collective bargaining? And I think organizations like Merlin are amazing, but they're only representing the rights holders and licensors. There's not an organization for managers and business managers and lawyers. And I think that that's the more that there's community and open knowledge, the more that people have confidence in changing some of these business norms and changing some of these precedents, because they're less relevant today than before. And one person's not going to change that inside of an institution. It has to be the collective bargaining.
Yeah, absolutely. And, as artists and managers are able to put together their own sort of bespoke teams around individual projects, it's beautiful that they're able to have that level of sort of customization and selecting how they want to release their music, who they want to work with across all these different parts of their career. The flip side of that is that, even today, you can see so many different entities that you could register with, and a lot of artists just don't even know where to begin. So as things like entities like the MLC come about, which is a big step forward, so many folks aren't aware that that is even something that exists or how it impacts their bottom line. So, I think that's, as we think about artists as entrepreneurs, I think that that's sort of a loaded statement. In a lot of ways, there is that same sort of beauty in it. But then the flip side of that is not to just expect them to have all the tools necessary to maximize sort of the financial side of it, and to maximize those registrations and how to make the most of every single layer of rights that you create when you write a song or record a song and release a song.
And I think the one thing I would challenge all of us on the panel, from Rory, Jim, Marcus, is how can we make people smarter? How can we better benchmark data to give them leverage, right? Like, each of us have visibility into pricing power, into deal flow, into all these various things. Since we're in the flow of funds, like, why don't we take the responsibility a little bit more to help guide and direct artists of all sizes and shapes and all contributors as to what we think an accurate rate is, right? Like, in tech, there's so many companies I can go to benchmark compensation data, equity data, all of this for every type of role. And that just doesn't exist in music, right? Like, it didn't exist in tech, and then Option Impact was able to create an incentive structure for companies to put in their own data in an accurate rate. Sorry. Puppy's getting excited about what I'm saying apparently too.
Yes, royalties. No, I agree 100%, Milana. I think, that's actually, for me personally, my entire mission. I remember one of the first people that even accepted our phone calls was Michael Lau. What Michael told me very succinctly, he's like, it's not about monetization as far as me being a tech startup, it's about compensation for the artists and their teams. And, that really stuck with me. And he's been a mentor and a friend ever since then. But he's
also in the audience, I think. It's just I'm commenting.
Is he commenting? Hey, Michael, love you, man. The only ex-tech gymnast publishing guy that I know in my life. But bring it to a head, I really, forgive the analogy, I've said it a million times, instead of the DDEX, this is about irrigation, right? This is about moving water from the Nile, from the labels and the major publishers to the larger pool of artists and creators out there. And so when we talk about growing the middle class, to me, a big part of that is the collaborators, not just the artists, but the teams around them. And that's why split payments are so important, guys. It's not just the producers and the songwriters. It's actually startups, right? We're giving equity in our projects to marketers, to business people, to attorneys, to social media managers. And if those people can see how equitable this can be, how equitable creativity can be, now you can build teams around some of these artists. And you're still going to have artists that suck, artists that are great, but the ones that the only thing they're missing is that social media aspect, or they're just not very good with numbers, but they can build a business around it because they can directly compensate their teams. You're going to start seeing more and more of that talent rise to the top. And that's a huge part of it. Now you have a baseline. Not just, okay, here are my top artists, but who's that one producer that's always works with these artists who are making $500 a month and they always jump to 1,500 in those patterns? Who is that activator? Who is that social media collaborator who tends to grow people 15, 20%? And now you're not just providing data, you're providing this ecosystem of bringing these serendipitous relationships together all over the world. And I know it's a huge dream and it sounds a little naive, but I really think that if we can help artists build teams and data and compensation, we're going to see some pretty amazing things happen.
And then this is all about education as well. It's just making sure that people are aware of what's out there and how it works, and that's a long-term commitment in order to make that work properly. Because we constantly see people who should know better not knowing some of the basics about how publishing works or how labels work and stuff like that. And one of the reasons why our blog is there is we found we had to start educating our clients how the industry works, so they could use the software products properly. Otherwise, they use 5% of it, it doesn't work, and they drop out of it. And a lot of this is also going to go back about data. So rather than looking for artists to get paid just for the work they create, they should also be compensated for creating correct data. And part of the consumption of data through APIs and stuff like that, people get paid for it. Split the payments with the artists, make sure that the data coming in is correct, and they see it as a income stream alongside everything they create. The data is also an income stream for them, and suddenly you're going to start getting much better data coming through, much more complete, and it's a industry in itself.
Absolutely. And I know we just have a minute more. So I just wanted to say, on the topic of education, Rory, cheers to you and Emma and the rest of the Synchtank team for creating this space. I saw someone in the Discord this morning saying, I'm here to nerd out and connect. And I think nerding out, this is in the best possible way to have this focused conversation around these very specific things for the people who care the most about it. Is not something that happens every day. So cheers to you guys. And I know we're all going to likely stick around for the fireside chat coming up, the last event of the day, but I know we are just getting to time. So I just wanted to thank the Synchtank team. Thank you, Marcus. Thank you, Milana. Thank you, Jim, for rounding out the panel as well. This was really fantastic. And, I certainly learned a ton from all of you. So thank you again.
Thank you guys so much. And thanks everybody for sticking around. It's a nice audience out there. So Synchtank, fantastic job, you guys, and what you built, what you brought together today. Thank you.
Amen.
Thank you, guys.
Yep.